please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning and welcome. You're watching Power Breakfast on CNBC TV18. As we begin the last week of 2017 in the Mumbai News Centre, I'm Mangla Malu and with me is Anisha. Good morning, Anisha. You know, we wind down on 2017, but how? We're at record highs and very little news coming in. Yeah. Nothing to suggest that this apple cart could topple.
Well, yes, that is perhaps good news for the bulls, that there is no bad news. But before we put on the party shoes in the last week, let's talk business.
Right, first up, let's take a look at the Asian markets. Remember, the Asian markets are mixed in early trade. Several regional markets reopened after the Christmas break. On the data front, though, November core consumer prices for Japan rose for 11th straight month, and consumer spending too was higher than the expectations at 2.1%. Expectations were 1.2%. Meanwhile, the minutes of Bank of Japan's October meeting, they showed most board members thought it was necessary for the central bank to persistently pursue powerful monetary easing. So the Japanese index down about 0.15%. Remember, yesterday the Nikkei was open and it hit a 26-year high. So that was as far as Japanese index is concerned. The Korean market's just about 0.2% higher as we speak. The Hang Seng, the Straits as well as the Taiwanese indices should come up for you. Yesterday they were shut in trade, and today they're opened with a mild cut. Nothing really to take cues from. As far as the SGX Nifty is concerned, remember, we're at record highs, and the SGX Nifty indicates that we will start absolutely flat in absence of nearly big cues coming in the last week of this trading week. But over the weekend, as usually weekends have seen a lot of data coming in from North Korea, a lot of geopolitical tensions taking place there. North Korea now released a video over the weekend criticizing the latest move to punish the country for intercontinental ballistic missile tests that it carried out about a month ago. The United Nations Security Council voted unanimously on Friday to impose new sanctions on North Korea. The measures cut refined petroleum imports into the country. They also demand they repatriate the North Koreans working abroad within 24 months, which would take away the source of hard currency for authorities in Pyongyang. Remember, these are the third round of sanctions by the United Nations so far in 2017.
Okay, let's see how the Wall Street ended on Friday. The Dow Jones and S&P 500 posted gains for the fifth straight week on Friday after President Donald Trump signed a bill that revamps the U.S. tax code. However, the major indices closed slightly lower for the day. Well, on that note, as we head into 2018, Nomura says that 3% growth in U.S. economy may not be easy. Adds that 3 Fed rate hikes on the cards.
I think 3% is probably a bit of a hard task. It's quite a mature business cycle now in the US. We do think we'll get a bit of a kick from tax reform and tax cuts, but the fiscal multipliers that we're looking at is probably around the 0.2 to 0.3 kind of lift to growth, but it does fade pretty quickly over time. It's not a kind of structural lift, and you won't see sustained levels of growth up there. The kind of stewardship of the Fed, they're making sure that they're proceeding quite cautiously. So if they see that the economy is a little bit more robust, they can tap the brakes, you know, a little bit harder and potentially do another rate hike. We've got 3 penciled in, which is pretty much in line with the Fed's view. But again, from our perspective, where we differ from the Fed is the terminal rate. So we've got 3 and then 1 more in 2019, and that's pretty much it. We think that's the end of the cycle. Still maintain our bearish dollar view. It's, you know, looking back to 18 months ago to 2 years ago, the dollar was strengthening because the Fed and the US economy was pretty much the only game in town. But now the rest of the world is playing catch up. And you look at the reactions of currencies over the last kind of 12 months, it's the move into the first kind of policy shift that gets the biggest change. And, you know, the Fed is doing incremental kind of rate hikes, and it's not really adding much to the growth, to the FX impetus.
All right, across the Atlantic then, in Europe, European markets posted declines in Friday's trading session going into the long weekend, With low volumes though, investors, remember, digested latest coming in the political as well as the economic news. So if you take a look at the political news, the Spanish vote out there, the Catalan separatists, they voted for independence, and the Spanish banks lost in trade as a result of that. So the IBEX, that one was down about 1.2%, opened with a cut of about 1.5%, thereafter recovered some of those losses. Still the most underperforming index across the European region. But if you take a look at the emerging market space, the Russian index, that one outperformed with a gain of about 0.75%, the Brazilian index to just above the flat line. So good news coming in from the emerging market space, but bad news as far as the political space in Europe is concerned.
Okay, let's shift focus then to the currency space now. The dollar index holds steady, shrugging off upbeat Japanese economic data.
In the world of commodities, crude oil edges higher on expectations that exporting countries will continue to maintain market stability in the coming year by limiting production.
And from the precious metal space, gold hits over 3-week high in thin volume trade.
On Friday, it was a roaring session as far as our markets are concerned. The benchmark indices ended at record highs. The Nifty hit that 10,500 mark intraday, but saw minor selling pressure and ended 7 points lower than the 10,500 mark. The Sensex just 50 points shy of the 34,000 mark. As we move into the last week of 2017, Anisha tells us what are the cues that are stacked up.
Well, Mangam, yes, as you rightly pointed out, last week was particularly good because the Sensex and the Nifty gained around 1.5%. But the major outperformance last week came from the mid-cap space because that index was up around 4%. And the experts say that that trend might continue in the near term. And the good part is that both the FIIs as well as the DIIs participated in the up move that we saw on Friday. The FIIs bought around 108 crores in the cash market, while the DIIs bought around 371 crores. Now, of course, the Indian market is opening after a long weekend to a truncated week, but in terms of news to catch up, there's not really much. The Japanese and the Shanghai market were open yesterday. While Japanese market moved slightly higher yesterday, today it is coming under a bit of pressure. Shanghai was under a bit of pressure yesterday as well. That one was down about 0.5%. The European markets on Friday, they also closed a tad bit lower. Remember, as you mentioned, the separatists win the Catalonian election, and that is what played in the minds as far as the European market is concerned. For the US markets, a bit of profit booking is what we saw in the US markets because President Donald Trump signed a bill that slashes corporate tax rate to 21% from 35%, something that the street is already working with, and maybe ahead of the holiday season, the positions is what the investors want to keep light. In terms of cues for today, well, many markets are shut today as well, like Hang Seng, Australia, New Zealand are all shut, but the other Asian markets are open. And if you look at Japan right now, that one was off the day's high the last time I checked. The data coming from Japan was all right because the consumer price index came at 0.9% versus an expectation of 0.8%. The November household spending also came in quite a bit better than what was expected. So on a year-on-year basis, it rose by 1.7% versus a forecast of around 0.5%. So that also bode well for that particular market, but maybe a bit of profit booking is what we are seeing. In terms of the other Asian markets, well, the last time I checked, the Taiwanese as well as the Straits were trading in the red. Let's see what they're doing right now, because the SGX Nifty also suggested a flat start. In terms of the key level to watch out for, well, the low of Friday, that was around 10,440 is the key thing to watch out for. And on the upside, the traders say that the immediate target may be around 10,520. But let's see whether we touch that today or not, Mangla.
All right, Anisha, thanks a lot for that. Remember, this week also is the FNO expiry for the December series, so we'll keep an eye out on that event. But what are the stocks that you're watching out for?
Well, a lot of stocks that are making news. There are a lot of reports flowing in this morning. One of them being that IOC, BPCL are keen to acquire GIL to become fully integrated energy firms. Something that we have been seeing in this entire sector play out. Let's see how this one works out. Other than that, we have recently just got reports that Cummins is also looking to buy Kirloskar, one of the firms, so that will be important as well. Coromandel International and EID Perry, where Coromandel has decided to acquire biopesticides business of EID Perry for around 340 crores. Naveen tells us that the synergies might work out, and both the stocks should hold up in the green today. Powermech, they have incorporated a 50% JV with Skipper in Dubai, clearly telling you that the international exposure is expanding, and they're looking to expand their business, so that should go down well with the street. Lumex Auto, something that we heard on Friday itself, that there was some IT raids on the company. They just came out with a clarification confirming the same. BHL, an order win for the company, 672 crores, not a very big order win, but a positive sentiment might come up for that stock. Corporation Bank, they have approved raising around 6,500 crores for various means, so that might as well play on the minds of the investors. Tata Power, a positive news that they have won a mining license project in Russia, so that should go down well. A good news for Welspun Corp as well. They have won an order to supply 124,000 metric ton of pipes, so that should also be a positive news. Prakash Industries, wherein SEBI has revoked the order of matter of the company being put into the shell company, so that should be a breather for the investors there. Indian Renewable Energy has filed for IPO. Let's see if it has any impact on the renewable sector, because that will be interesting after the recent IPOs that we have seen. And lastly, NBCC will be in focus, because over the weekend, remember, we heard the news that CBI has filed a charge sheet against the company's chief, which is Mr. A.K. Mittal, regarding the Pragati Maidan project. The name of Capacity Structures was also put in, but later the Capacity Infra Projects, the company said that they are two separate companies and they have nothing to do with that particular one. So I'm not sure whether the impact will come on Capacity or not, but definitely a reaction on NBCC is what I'm expecting, Mangala. Well, 2017 has been a glorious year for mutual funds. Lata Venkatesh and Anand Singhal discussed with top mutual fund managers to know what 2018 looks like and if the Indian markets will be able to sustain the growth going ahead. Take a listen.
So two ways to look at it. So India has participated in the synchronized global equity rally. We haven't fully participated in the synchronized global growth. The growth cycle is yet to begin. Even from the profit perspective, the profit cycle hasn't really reached the end state. And I think we have a long way to go from that perspective. But always, I mean, markets front load a lot of those returns which we are likely to see both in the economy as well as in the corporate profits. May not be able to repeat what we have seen this year, particularly in the mid and small cap space. But I think as long as over the next several years we have a good economic cycle and the profit cycle, equity markets can deliver decent returns.
Okay. Well, even if say 45% is obviously a tall order and a tall goal to set, would you say, Manish, that this is a market where the downside quite clearly is protected simply because both liquidity and growth are certainly on the side of the investor?
So clearly from a valuation perspective, you have downside because obviously you're trading much above your historical valuations. But as was pointed out earlier, from an earnings perspective, so over last 8 years, your earnings CAGR for Nifty is 4%. So clearly from an earnings perspective, you're protected in the sense that you're starting off from a base which is very, very low. So I would think it's a market of middle level attractiveness. Valuation is a bit expensive, but next 3-year compounding in earnings can be 15-20%, so which should be quite healthy.
Retail investors have made a lot of money and their hopes would be high for 2018. What kind of return expectations should they have, especially for SIP investors going forward?
So essentially, Anuj, inflation has come down. From double digit, we are in single digit, mid-single digit. By definition, returns will have to come down in nominal terms, even if real return remains the same. So that's one way to look at moderation in return. The second way to look at is valuation-wise. We are today trading at reasonably fair valuation. Now, if you invest in a bear market valuation, exit at bull market, you make a lot of money. But if you enter at fair market valuation, your returns will have to be moderated. The third way to look at is commonsensical. In 2017 and 16, we had a betting pitch where we could score run quite freely. 2018 is going to be a bowling pitch. Inflation is on way up, though not as high as it was before in double digits. Interest rates are on way up, though it won't go as high as the previous cycle. And most importantly, globally, central bankers are withdrawing liquidity. In some sense, I call them Rajnikant effect. Like the southern superstar who could do anything, the central bankers have done anything. There was a problem, they threw the money, liquidity showed up the market, asset value. On one side, it created frenzy where a picture goes for a $450 million price tag. In 2018, those central bankers will retire or gradually take out liquidity, and that will have an impact on asset value. So whichever way you look at it, inflation-adjusted return, valuation-adjusted return, or simply liquidity-adjusted return, 2018 will be a year of moderate return compared to 2017, and hence SIP investors should just moderate their expectations.
The mid-cap index has outperformed 20% this year compared to the Nifty. Last year it was outperforming the index by 6%, and I think previous year as well. So it's been a bottom-up stock picker's delight, our market that is. But do you think it's now getting a bit vulnerable? As a fund manager, are you finding enough listed stocks now in the mid-cap basket to put incremental money, or are you now looking at only the IPOs to park the incremental money?
Clearly, what has happened is, as AMCs over the last 1.5 years, we've been marketing large caps. But large caps continue to underperform, and the reason we recommend large caps is because there's a huge margin of safety in large caps. As Manish pointed out, earnings has been muted for years on end now, that you have a lot of margin of safety in large caps. But if you ask me, do mid caps look cheap? The answer is no. They look very costly relative to large caps. But just like this bull run can go further, you have a situation where large caps have margin of safety but lower returns. So it's much wiser for a mutual fund to push large caps than to push mid and small caps now.